Okay, let's take a look at this tax question that deals with a vacation home, and I'll read it to you, which appears right up top here. Matt and Marie own a vacation home at the beach. During the year, they rented the house for 42 days, that's 6 weeks, at $890 per week, and used it for personal use for 58 days. The total cost of maintaining the home are as follows. So the total costs are listed here. We've got mortgage, interest, property taxes, insurance, utilities, repairs, and depreciation. Now, Part A says, what is the proper treatment of this information on the tax return using the tax court method? And let's take a look at that solution now. I'm going to slide this off. And what we see is that under Schedule E, we would show income equal to 6 weeks at $890 each for a total amount of $5,340. Then we've got to do some allocations. The mortgage interest would be 42 days out of 365, and the 42 is the 40 days we rent, right? So we take the $4,200 of mortgage interest given here times 42 out of 365 to come up with 483 days. Now, 4,200 less 483 is 3,717, and that would show up on Matt and Marie's Schedule A, right, as an itemized deduction. Okay, then we take the same 42 out of 365 and allocate property taxes, come up with $81, and then the property taxes also, the balance, shows up on Schedule A. Now, for insurance, utilities, and repairs, we've got to allocate the total expenses between our rental investment, our rental property, and our personal use. So, if you remember, we had 42 days being rented, 58 days for personal use, so 58 plus 42 is 100. So, 42 out of 100 days, or 42% times $1,200, gives us what amount would get allocated to Schedule E for insurance. We use that same approach for utilities and repairs. Of course, the only thing that changes is the dollar amount of the various expenses we incurred. All right, now depreciation is limited to net rental income, and therefore we're essentially plugging it to come up with $2,130 so that there's no net income to show to the bottom line. Okay? And that's how we would tackle Part A. Okay, now let's take a look at Part B and C. B says, are there options for how to allocate the expenses between personal use? And let's take a look at what that answer says. And the answer tells us that the taxpayer can use the tax court method or the IRS method to allocate expenses. And this allows for an overall larger deduction. However, the IRS has maintained it will continue to fight the tax court method. Okay, and then C says, what's the proper tax treatment if Matt and Marie rented the house for only 14 days? And I'll move that off, and we see that in this case the property would be primarily personal, and none of the income would be included, and only the interest and taxes would be deducted on Schedule A. And that's this problem, everyone.